This is a video again about downloading from the internet and stock prices and all of that stuff. And if you said, you've made too many already, oh, stop it for me. But I'm not, because this one is putting everything together. So if you want a central source for where you can get things, it's here. I want to show you how you can get data on either stock prices, bond prices, interest rates, exchange rates, and just put them all up. You say, I have Bloomberg, I don't know that, I don't need this, but I still think showing you how to read the data, how to really calculate faster, how to work with different timescales, different currencies, etc., is going to help you. Okay, so I've kind of already said a lot of this stuff enough. I don't have to read every single every single PowerPoint slide. Okay, now there are a whole lot of other databases. There's this country database that I'm going to open and then reclose immediately. If you go to the Google Drive, or if you go to the website, in chapter 1, in folder H for all the databases, there's one called country database. And you probably really only have to update this about once a year or something. Now, I just opened, what's opening now is just this stock price thing I'm going through. But this is kind of similar. It goes through and gets all of this data. Look, there's Ghana, Argentina, everybody here, okay? And you just create a URL essentially with different code numbers, different time periods, and then you can start picking a whole lot of different variables. Now, I don't know if I got all the variables really that you can get. I think I probably didn't, because I started kind of with Ghana, okay? And I'm switching the formulas back to automatic, and then if I want these kind of countries, I can see what happened to the GDP per capita. Singapore seems to be distorting the graph a little because it's so high and grown so fast. So I just take them off and I see what happens, and I can see the raw data or the index data, and you can go back for, I went the wrong way, of course, excuse me for that. I'll go back this way. Okay, and it's calculating. You can see it's a little slow, and that's going to be one of the big subject here. So I have a few different countries, and now I computed the index. And let's say I take, I don't know, let's look at China. Okay, and then we can see what's happened to them. Oh my gosh, see, China in terms of the growth has been really high. In terms of the raw level and the GDP per capita, not so high. Okay? In fact, well, it's highest here. And then we can look at all sorts of things like population, and I might go through this, or GDP per debt to GDP and all that stuff. Here's the absolute level, but the index, you can kind of see who's been growing faster. So China was highest in absolute level, of course, but Uganda has been growing really, really fast in terms of population. Blah, blah, blah. Okay, enough. Now I'm going to show you how to use this other one, which is just a whole lot of prices, primarily stock prices, but also commodity prices, oil prices. That's what happens to be on here. Now, so what I'm going to do is show you how you compile all the data. I want to find a way. So one of the most painful things when you do all this stuff, maybe if you have Bloomberg and you're really rich or whatever, you work for a big company, you don't have to do this, but finding the data and not having to go search for it on a website, stick it in here, and then take so long. So I'm going to first show you no technical stuff at all, just very quickly how it works. And then go through some of the Excel techniques, not all of the macros and all that, but then show you the macros. Then you might want to turn it off. Okay? Don't be intimidated by the macros. Please, you just need a couple of little things. It's like in Excel, you just need to look up an index and a couple of other functions. You don't need all this stuff. Okay, and then how do we really get it more efficient so it doesn't take so long like that other one? So I'll show you a little bit how to compare stock prices and commodity prices, use different time periods, different exchange rates, blah, blah, blah. Okay, now if you go through this, okay, here's the way it works in general. There's a content page, which I didn't update. Then there's a read stock page where you read it from Yahoo, Fred, Google Finance. I got to tell you, Google, those horrible people, they stopped it. Those monopoly. Oh my gosh, you can't get them from Google anymore, but I hope they change, so I left it there. And then you can get commodity prices. Yahoo, it's a pain now, you can get it again, and exchange rates and interest rates and all that. And then you make this really long list of everybody you want. So here are some price indices, here's some fuel prices, here's some, and these are the sheet names, by the way. And here's some stocks, a lot of stocks, and then here finally some exchange rates. Okay, and then here's a stock graph, and then there's a summary sheet which goes through all the analysis, and this is the sheet that can really slow you down. So I'm going to show you how you can, instead of recalculating this sheet, just recalculate parts of the sheet. And it turns out to be, in some ways, easy, and in some ways, a little hard, difficult. So what did I do first? So the first thing I did is, okay, I said, okay. Oh, and I didn't show you here. If you want to then decide how to get the data, I have kind of here. There's like a little bit of a master list. I've got only a few indices. And then right next door to it, I try to put a bigger sample. That's not very interesting. But if you go to the commodity prices, here, I kind of try to put all these commodity prices that you can get from this Federal Reserve Federal Reserve economic databases. And what you really need is all these little code numbers. Once you have these code numbers, you make a little URL. So I tried on the side, put all of this stuff on the side where you can get all this stuff. And then the stocks, here I got a whole bunch of stocks, but I put a lot more other samples of utility companies, I hope, maybe, yeah, there's some utility companies, there's some telecom companies, some general companies, some oil companies. So you can essentially just put an equal sign, whoops, not there, equal sign and get this. So in this case, I put an equal sign and just got a kind of big sample of companies. Okay, I gotta catch my breath. Okay, so now let's just show you kind of how it works. Now, I'm going to start with just one stock or one even index. Here's how I set it up. Perhaps this, with hindsight, doesn't make sense, but if you want to compute the beta, I showed you the beta and the volatility and the IRR. So I'm going to start with the S&P 500. I think that's a good one to start. Now, when I do that, it puts all the dates together, and we have dates from on this stock from all the way back to 1950, and then I click on false all, and all this does is set all this range name to false, and then I have my little database. Now, here's the real innovation, I think. You put a different date in, and it doesn't take a whole lot of time to recalculate, like that other blah, 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 the other country database. I think I might have to apply some of these recalculate techniques to that. And let's say I want to compare that to GE or something, okay? And when you compare it to GE, then it throws in the IRR and the volatility and the beta and all that. And then you can see, well, what's happened to the beta and the IRRs on these two stocks here. GE did better since 1980, but, you know, they've come way down lately. And now they've kind of done a little worse if you start with 1990 because they had a big, big crash in 2008. The beta says it's 27% more, but, you know, this difference in volatility probably is really driving a lot of the beta. That's a little secret that nobody tells you. Okay, so that's enough. Then let's say I want to compare some indices. So I'm still on the S&P 500. That's my base index. That's in kind of whatever, the dark blue. So let's compare that one to Microsoft, perhaps. Then Microsoft really was. That's why Gates is this billionaire, and oh, look, it's really done pretty well. These are the Yahoo stock prices, which include dividends. So when you kind of compare it, then if you compare it more recently, you can see what happened, and you can see that the kind of growth rates you get and IRRs and all of that. Okay, so you can compare multiple stocks. I had another stock price graph, but I kind of couldn't compare the multiple stocks, so you can just add this another one. So I don't know. Let's add a bank, J.P. Morgan. They probably went way up because of this tax change. We're just a gift to, this is the transfer of wealth really happening here from whatever, giving an enormous tax break to everybody. So then we can look at them in different time frames. I don't know why I did that. And you can, enough. Now, let's move to something a little bit different. And again, these betas, of course, are all calculated against this base index. Okay. I want to show you now the way this generally works. It's not very complicated. There's a little true and a false, and you just accumulate this variable. You just go and down here and accumulate the variable. Of course, this thing is computed with Shift Alt right arrow. So now we have 2 trues, so it accumulates, 3 trues, it accumulates, and then you just make a simple counter. This is Alt EIS. This is just a number. And then after that, you match with a 0. You get an exact match, not an approximate match, an exact match of this number versus the counter. And that gives you the row number, I think. It gave me 22. Right. It said, the reason it gave me the row number is I took the whole column F. It said, go down and find the row number where you just first hit a 1. That's what it did. And then you take the index with the entire row number, and it gives you the thing. And that's how you graph everything, and that's how you collect the data, because each of those little things is a sheet name when you read the data. That's how it works. It's not that complicated. It's not, I swear, well, I shouldn't say that. Okay? Now let's keep using it. So I'm going to reset this all. It's recalculating a little, and then we still have the index, but this time let's compare it to the DAX. If I compare it to the DAX went up higher. The DAX outperformed. The German stocks outperformed the U.S. stocks, despite what this book, McKinsey book, might say. Now, there's one little problem with this, okay? And you can look at different time periods. Maybe you could find a time period where it didn't outperform. Okay, I'm sure there are some. Here, this one didn't perform so well. If you started right in 2001, that's kind of a problem. But you can see what kind of IRR you were making in different markets. Okay, and the biggest question is, with the stocks so high, how much of an IRR can you make in the future, of course. Now, the problem with the DAX, it is expressed in a currency. Here I did the FTSE, and if you look at this carefully, you can see the FTSE is in pounds, and a lot of these stocks are not in the same currency. They're not in USD. You have to go, when you collect this stuff from finance.yahoo.com and go get the ticker symbols, you need to know what kind of currency they're in. So what you do is you just click on this one and you say, there, I put a exchange rate. And what you do is you collect all the exchange rates. I collect them from it's the same sort of thing. Here's the exchange rates for euros, and they have and I put interest rates and all that. You can collect any kind of data. You just go to this Fred website and you just get the data and you just stick it in there. Now it's, well, okay, it's kind of similar. It didn't make that much of a difference, I guess, to put it in euros, but because the euro and there, it made it go down a little. Okay, so that's a more fair comparison. And then we can get the FTSE. And that's kind of depressing if you're from the UK, and it's not just Brexit, it's been not performing well. Oh, that, if I use India exchange rate, that's really not so good. And then how about let's get the Seoul? Let's see what happened in the Seoul one. And there you're just getting this. Oh, but this didn't start till later, so I have to adjust this perhaps till. Right now I'm in 1990. I maybe have to go to. I'm in 1988. I got to go to 1999 or something. Huh. And then I didn't put the Seoul thing in. So let's take the Seoul one away and let's compare it to the India. So those are the kind of things you can do, and you can get them all sorts of things. Now I know you can do a lot of this on Bloomberg Fine. Okay, so that's the exchange rate, and we'll put that in the right currency, and that's really outperformed everything by a wide margin, even after you kind of put it in USD, and you can argue about betas and magic potion with betas as much as you want. And you can read some of this stuff that says, oh, we can't apply a beta to the foreign stocks or whatever. Look at the volatility, really. That's so correlated with the betas anyway. Okay, enough of that. We'll take that one out, and we can also look at just the industrials. Okay, enough of this. I'm just playing with this because I'm so happy it kind of works quickly. And now this is all monthly data. I'll show you how to switch it to weekly data or daily data. And then we can look at different kind of what happens. Let's look at just an industry, for example. So I'm going to say, all right, well, I'm going to take this away. Okay, now if I press this one and it clears all the sheets, it kind of puts this back to the U.S. anyway. Okay, but this time I'm going to do it by hand, and we'll look at a couple of different strategies here. Now, perhaps I should change something on this a little bit, but I'm going to look at some electricity stocks. So I have Tenaga, one of my favorite companies. I have Meralco. Let's go down here. That what I just said is I don't like the fact that I have to go back up. I tried to go back up each time so you see the thing. And let's take a boring old utility called Consolidated Edison, a distribution company in New York City, and let's take a innovative kind of, not innovative, whatever, IPP. And IPP went up and down and up and down. The utility company, nice old boring company, outperformed everybody by a wide margin, which the Meralco's down here, and Tenaga is here. And of course, let's use a different kind of starting point. Okay, so the problem is that last Meralco only started much later, so I can only see it later, and then you can see how it's monthly data. Enough of that. I'm going to press false all, false all. And now I'm going to show you if you just want to use this for commodity prices instead. Oh, this is here, commodity prices. Well, let's start with, perhaps let's start with the oil price. Now, in that last one, I kind of should have, perhaps I'm going to start with the Brent price. And what this does is it resets. We only had Brent prices starting in 1987. And by the way, I should have really said, the way this is working, every single little thing is a nice little time series in a bunch of little sheets at the very end. And then you just use the lookup function together with the indirect function to get this. And you have to do a couple of checks and other things to make sure it's all working all right. Okay. Then, after we get the prices, what if I want to compare that to the Henry Hub gas price? Okay. And I didn't do that. I did that. That was index of all commodities. Let's take the LNG price in Asia, which is a very similar kind of thing. has a similar volatility. Why the beta doesn't really work out so well is kind of interesting to me. It seems to lag a little bit, you know. I hope I have the prices in here and they're a correct thing. I just used the same prices. I never really checked that. We could use this global price of natural gas, which must be some sort of mixture of everything. And then I can compare that to the Henry Hub. And I can look at volatility again, how it moved. This is the Henry Hub. It had a big spike. And we can go backwards and forwards and just kind of see how all of our commodity prices move together. And if I want to get the price of corn and see how the price of corn is related to all of that, I can add that one in too. I think that didn't have such a low volatility. I should have perhaps. And then we have the price of hides. Somebody in Mongolia asked me about the price of hides. Okay, and then I can, if I want to do it false all, I can start with the price of hides here and then compare everything to the price of hides. Again, this time, it went all the way back to 1980, so I can look at that and see, what's happened to the price of hides, and why did it go down, and went down by 40%. It's got a 22% volatility. Let's compare that to the price of corn. Why? Gosh knows why. Okay? And you can see that's monthly data. That's why it's got a little of those flat things. And that's what you can do with it. And how are we doing? I'm already on 20 minutes. Okay? So, here's what I'm going to do. You can... I'm just going to introduce what I'm going to talk about next. I already talked kind of about this base series. But this time I'm going to discuss how to really work in detail with some of this, reread the files, and I've got a blank one here, and then talk about how to make some of these macros that make the whole thing work. And I think there are quite a few things in here that could be helpful. Now, I just had promised to end the video, and I'm breaking my promise because I think I'm going to do one more thing in this file. One more thing in this file. So if you, let me just say, let's say I don't want all this stuff you showed. I want to get a whole new set of stock prices, new set of exchange rates. I want to get all my own stuff. Okay, so you go through here, and you can clear all the sheets, okay? And then now what happens is this is completely empty. There's nothing in here anymore. It still shows the graphs because we don't have any recalculate, but all those sheets are all gone. So then how do I just go through? Let's say I want to just this time, let's get some different indices. So right now I've got the Seoul, and I don't want the Seoul. I instead want the Dow Jones for some stupid reason, okay? And then I put, and here I don't want the India. Instead, I want the Australian index, okay? Control R. And then I better press Shift 9, just for one page if you want Shift 9. Oh, what did I do here? Oh no, let's get the Nikkei. How's that? Control R to copy to the right. Shift 9 to just calculate it. Okay? And I'll leave the rest in or whatever. And what it does is it says, okay, I have 7 total tickers just with the count. And right now I'm on ticker 1, but I can put on ticker 2 and all that. Now in this, I could clear all sheets. I have to, this one's going to be a web request kind of a macro, and I can read them all together. I have to initialize a URL. Instead of doing that, I just go to this first one, and I just click on this, and then it goes through, and I'm going to leave this on right now. I'm going to leave this on. I'm not turning the video off. I should. But it's going and reading all the tickers. Okay? And it's using that web request. Oh, it didn't work so badly. And then it just pushed them in a new sheet right at the back. And I think you would want to watch this next video to see how this all works. And then to see how we can arrange them all and how we can make the graph. And then we can decide, I would like to compare everything to the, just a minute. Shift F9. I have to, not shift, I don't know if I said a bad word just now. I got the Nikkei all the way back, okay? And then okay, I had to recalculate the sheet. Here's what happened when, I guess we had it going up by 4 times. We had a nice inefficiency in the market because every neighbor thought their stock price was going up and you just kept buying stocks and the stock price went up. And then we can compare that to, let's put everything to be false and let's just compare this kind of thing. This is a kind of nice little, let's compare that with the FTSE, and the FTSE kind of just kept going up. Actually, we have some big spikes around the year 2000 and all that that you didn't see here. And I don't know how far back we can go and get that. And of course, we should put that in the relevant kind of currencies, and you can really see this spike. That's reading the data, and you go do the same sort of thing to read in all. You can read in Fred indices. So there are all these indices from the Federal Economic Reserve Database. It doesn't really tell you. Yes, it does. I shouldn't say that. And then you can read these commodity prices. Let's read a couple of commodity prices. I'm going to leave these commodity prices. Perhaps I'll read one more in just to show you how it works. So let's see, what can we get that's kind of more interesting? Let's get the price of cotton, because that caused some bankruptcies. So we just put this in. I copy this across. Now, this one I don't need, and this one I just press Control D to get it there. Shift F9 to get it on the correct sheet. Then we have it, and then I'm going to go and reread this. So I go to the very first sheet. I could go to the other one, and I just press read all the commodity prices, and it just goes and reads them all. And then let's just compare the price of cotton to the price of these stocks. Okay. And it's reading them in. I purposely am leaving it on, very aggressive to kind of leave it on, I think. And then we add the price of cotton down here. I hope that I need to press the F9, and whenever I'm pressing the F9, I'm messing up the video because the F9 is a key that's used in this video thing. Okay, so there's my price of cotton that showed up, and I put that in, and I can see what happened. There was this enormous spike in this price of cotton that came down. We can take out the rest of this stuff. In fact, we can just, if we only want to look at the price of cotton, we just go down here. Okay. I think I hope, here's what I'm hoping that I've done. I'm hoping that, and I'm not going to get all nervous and start swearing right now. Okay, I had to compute everything again, I guess, when I reset the whole thing. Maybe I should add a little macro there. I'm going to show you how that would work. I don't need the price of cotton now because I have it here. And we can really see what happened to them all. And I'm stopping this video. Finally, I promised to stop and I didn't. And let's see what comes out.